know where the market will finally bottom? Honestly, no idea. This is a biological crisis, not a financial crisis. I'm not a doctor or a public health expert, so I have no ability to really make the call. You know what I know, though? I know the stock market, and it tends to react to this kind of thing in some significant and familiar patterns for me. I know what you can buy and what you can sell. Doing it for 40 years. Should have learned something. First off, many of you, unfortunately, are out of cash. You're riding around with a full plate of stock. You need cash here. We put some money to work today for the Charitable Trust because we hadn't touched any of the capital we had socked away when we went into this week. We waited and waited and waited before we pulled the trigger, and now the market's come down enough that we have no choice but to start buying, just like you had no choice to start selling when it kept going higher. The buys look prescient, at least momentarily. Not taking credit, could get walloped Monday. We've had back-to-back days, though, where 10 times as many stocks were falling versus going up, and that is highly unusual. It suggests we're getting closer to a bottom. That's a crescendo sell, as my late friend Mark Haynes used to call it. Though we probably may not be there yet. We could have more of a crescendo. It always seems to happen in the real bad ones. We can expect more bad days, and this weekend's probably going to be terrible. It's a coronavirus outbreak, and it continues to spread. We might even see a world leader get sick, and that would be disconcerting. How about if a world leader died? But this is the time to high-grade your portfolio regardless. I want you to take some losses and move to better stocks. If you own shares in a company that's involved in travel or leisure or autos or housing even, that company will probably miss its numbers, and the stock will indeed get hammered. I know these groups have already been crushed. That doesn't mean they can't get crushed some more. They should be sold. Many bounce today. Opportunity. Once you've raised some cash, what do you do with it? Well, you got to keep some on the sidelines to be ready for the next leg down if there's more bad news about the virus. And you know what? Obviously there will be. But the rest, well, you can put it in some gold stocks. Oh, they've been crushed. They got really ugly today. Here I'm thinking about Barrick Gold, run by Dr. Mark Bristow. He's the best gold miner there is. Got slaughtered. Perfect. You don't want a gold fund, though. Too many bad ones. What else? You got to swap out of a hotel or cruise name. The cruise name's bounced today. So you use that bounce and you move into high-quality drug stocks, like a couple that the ActionAlertsPlus.com club recommends, Abbott Labs. They got crushed. Shouldn't have. Consider the better-run food and beverage plays like Coca-Cola, which reported an excellent quarter. This whole group went down today. If you own an oil stock, I can't help you. The whole group is cursed, especially with the price of crude at 45. Don't try to be a hero there in the oil patch. Just cut your losses. I know a lot of you were attracted to the 7% Exxon yield. God love you. I'd much rather own a supermarket staple or biotech. Hey, by the way, Moderna, for example, says they've already got a corona vaccine, all right? It's ready to go. Before Dr. Tony Fauci, the head of the National Institute of Allergy and Infectious Diseases and a brilliant man, was silenced by the president, he seemed optimistic that that vaccine could work faster than people think, faster than he thought even a month ago. What else? Stay-at-home plays, Zoom, Etsy, Shopify. Don't forget Teladoc, RingCentral. And if you want some yield, I like Verizon and I like AT&T. The latter's a new one for me. May turn out to be a gift. I'm confident AT&T can maintain its dividend because its cash flow is excellent. It's fallen way too far. Verizon's among the steadiest stocks out there. Pick one, buy one. No matter what, though, I'm urging you to have a lot of cash on the sidelines and put money to work gradually because there will be many more bad stories. You buy slowly in stages. Next week is stage one. There will be more stages, likely at lower levels. Maybe you missed the bottom today. It could be revisited. And again, if you don't have that cash, sell something like on that blast we had this afternoon. Why? Because I think you won't have the cash to make good, not trades, but investments when this is almost over. Angela in New York. Angela.
Hi, Jim. I'm calling about Starwood Property Trust. I know the stock's been going down, but with a dividend yield of approximately 7.9%, is this still a good buy?
I think Barry Sternlicht is a very smart man, and he saw a lot of this coming. And the answer is absolutely. I, of course, want Barry to come back on because he's so good. But, yeah, I mean, that decline seemed to be unwarranted. And I think that he's seen it all. He's an old-timer. He knows what to do. This is the time to high-grade your portfolio, people, especially into that bounce we got this afternoon. But still keep some cash for next week because we know there'll be a lot of unexpected negatives. All right, much more Mad Money ahead. As companies continue to sell first and ask questions later, is it worth eyeing the clouds for potential buying opportunities? I'm talking with a brilliant company, Cloud Prince Atlassian, symbol team, to see what's ahead. And before the coronavirus outbreak started taking up all the oxygen in the market and the room, One of the most exciting themes I spotted was the sudden embrace of sustainability among one of the companies that was set to be a top beneficiary of the trend. And after another dark day on the averages, I'm taking all your questions in tonight's edition of the Lightning Round. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.